Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Constellation Brands Inc. quarterly report. Constellation Brands Inc. offers a diverse range of businesses and services across the beverage industry. The company's portfolio includes beer production under popular brands such as Corona Extra, Modelo Especial, Pacifico, and Victoria wine production under well-known labels like Kim Crawford, Meiomi, Ruffino, and Robert Mondavi Winery spirits production under brands including Casa Noble, Copper & Kings, High West, and SVDKA distribution of its products to various channels, including plus wholesale distributors plus retailers plus on-premise locations, e.g. restaurants, bars, plus state alcohol beverage control agencies. Constellation Brands Inc. Stock price drop. A year of disappointing results and challenging market conditions in the past year. Constellation Brands Inc.'s STZ stock price plummeted by over 39%, attributed to a series of disappointing financial results, lowered guidance, and challenging market conditions. Several key events contributed to this decline. The company's weak fourth quarter results in January 2025, which fell below Wall Street's expectations, led to a significant drop in the stock price. This was followed by a substantial cut to fiscal year 2026 guidance in September 2025, causing shares to fall further. The updated guidance included a projected decline in comparable earnings per share and net beer sales. The second quarter fiscal year 2026 results showed an even larger contraction in sales and non-GAAP operating profit, attributed to socioeconomic headwinds affecting consumer demand. Operational and market pressures, including higher marketing expenditures and declining beer volumes, also played a role in the company's declining performance. Analysts have noted a lack of visibility to improving demand trends, contributing to investor concerns. Despite some believing the stock has been overly punished for cyclical pressures, the negative outlook and disappointing results have significantly impacted Constellation Brands' stock price. The primary drivers of revenue growth or decline in this financial summary are primarily attributed to two main segments, beer and wine and spirits. The beer segment experienced a significant net sales increase of $4.30%, while the wine and spirits segment saw a substantial decline of 46.2%. Additionally, the company's overall net sales increased by $136 million, with notable decreases in cost of products sold and marketing expenses. However, foreign currency contracts had a negative impact on revenue growth, amounting to minus $173.3 million in Q2 FY 2024, but a positive impact of $79.1 million in Q2 FY 2026. Commodity derivative contracts also had a negative effect, totaling minus $9.7 million in Q2 FY 2024 and minus $4.7 million in Q2 FY 2025. The company's revenue growth is expected to be impacted by the OB3 Act, which will negatively affect its effective tax rate for fiscal 2026. The financial performance of the company has shown significant improvement over the past year. The net income has increased from a loss of $322 million in 2024 to a profit of $982 million in the 6 months ended August 31, 2025. This represents a substantial turnaround of $1.3 billion. In terms of profit margins, the operating margin has improved dramatically from minus 14.6% in Q2 FY 25 to 40.6% in Q2 FY 26. The gross margin also showed an increase, albeit a smaller one, rising by 0.8 percentage points to 43.5%. This improvement in profit margins is likely due to the company's efforts to streamline operations and improve efficiency. The net income for Q2 FY 26 was $544 million, representing a 12% increase from the same period last year. Overall, these results indicate that the company has made significant progress in improving its financial performance over the past year. The company's financial performance indicates a strong ability to generate cash from its operations. Two key metrics support this conclusion: $1.49 billion in cash flow from operations for the 6 months ended August 31, 2025, and an operating cash flow of $941.2 million. These figures demonstrate that the company is capable of producing positive operating cash flow, a crucial indicator of financial health. The company's debt level and interest expenses have undergone significant changes over the past 2 years. Initially, long-term debt decreased by approximately $300 and $98.6 million between February 2025 and August 2025. However, this trend was reversed when the company's debt balance increased by $1.3 billion to $6.4 billion due to refinancing activities. In terms of interest expenses, there has been a decrease in net interest expense from -$206.8 million to -$186.5 million between Q2 FY 2024 and Q2 FY 2026, indicating a reduction of $20.3 million. This suggests that the company's debt level changes have had an impact on its interest expenses. The company's financial performance varied across different segments. The beer segment showed mixed results, with net sales down slightly but comparable operating income decreasing more significantly. However, the U.S. market performed strongly, driving an 8% increase in net sales. In contrast, the wine and spirits segment underperformed, with net sales and comparable operating income declining substantially. This trend continued into page 11, where net sales dropped by 3%. The corporate operations and other segment also experienced significant losses due to high general and administrative expenses. Management is optimistic about the company's future performance. They are focused on cost reduction through a restructuring initiative, which will result in significant savings by 2026. The company expects to see strong operating performance with improved margins and increased comparable operating income. Additionally, management reaffirmed its full-year guidance for net sales growth of 5-7% and EPS growth of 10-12%. Acquisitions and divestitures overview. In recent years, the company has undergone significant changes through acquisitions and divestitures. On the acquisition side, the company made notable purchases in 2024 with the Sea Smoke business acquired in June of that year. On the divestiture side, the company sold several key assets to focus on core operations. The SVEDKA brand and related assets were divested in January 2025, while Mexicali brewery assets were sold in July 2024 for an undisclosed amount. Additionally, a portion of its wine and spirits business was sold to a buyer for $846.5 million, primarily consisting of mainstream wine brands. These transactions demonstrate the company's strategic efforts to optimize its portfolio and allocate resources more efficiently. The company's financial summary reveals that it has engaged in share buybacks. Specifically, a total of 3,375,602,000 shares were repurchased at a dollar value of $604 million. However, there is no mention of dividend payments to shareholders. This indicates that the company has chosen to allocate its resources towards reducing its outstanding share count rather than distributing profits as dividends. That concludes the financial summary for Constellation Brands Inc. Feel free to comment below, and I will be happy to answer them when possible.